And as you mentioned in your book, the permanent distortion will continue as the Fed sort of steps in and keeps the banking system afloat. But that doesn't mean necessarily that you won't see that leading to a further increase in equity markets in this distorted system that we've now sort of found ourselves permanently in. Great book, by the way, Nomi. So what does that mean then for gold? Because the gold investor, typically a little bit more savvy than the equity investor in terms of looking at other macroeconomic trends, in terms of reading just beyond the headlines. So what does it mean for the gold investor that sees, okay, we do have more money coming into the system? Do you expect gold to react to that?
Yeah, I do. And I think gold investors, as you say, as we've discussed a lot, tend to be savvy about timing. In other words, not trying to time when gold is going to specifically rise by a certain amount in a certain, tiny fraction of time, but to look at all of the factors that we see coming together right now for giving gold prices a lift. And those include what we've been talking about, the ultimate reduction of rates and potential QE along the way, and potential bank crises along the way, which we have seen historically to be net positive for gold. Any of those have added between 10 to 20% in and of themselves to the price of gold around the time that they happen. We also have continued central bank buying, particularly led by China, as the desire for more geopolitical independence continues to filter through the BRICS countries. And now the BRICS countries include a number of other major oil producing countries like Saudi Arabia, who are also looking towards buying mines for gold and other commodities. So we see this trend towards finding and utilizing more gold in moving away from trading specifically with the dollar, at least diminishing that trading amongst those countries, and also just in general, sort of moving away from the strength of the supremacy of dollar-related policy and U.S. policy. So that's going to continue, and that we've seen add between 10 and 20% to gold prices over time. And also we have an election year. And what we've seen, and it's sort of been in tandem with banking crises since 2008, is that gold tends to rise and the dollar tends to fall in the year or two after a major election. And given that's the case, and in the last, since 2008, actually even before that, going back to 2000, we've seen gold be able to appreciate between 50 to 100%. Now, I'm not saying gold prices are going to go to 4,000, but over this sort of 2-year period with all of these factors coming into play, I think we can definitely see gold go to 2,400 this year to the dollar and possibly to 3,000 in this entire gold cycle over time. So what that means to a gold investor is to continue to average in. Don't try to pick the moment, because all these factors don't all happen at the same time that gold is going to spike, but continue to accumulate on a regular basis, because I believe we are in a gold bull cycle for all of these reasons.
Nomi, I'm going to pivot to another topic here. We're running a little tight on time, but can't let you go without getting your thoughts on an issue that you've been waving the red flag on since early days, and that is CBDC, central bank digital currencies. You were one of the first to highlight how a central bank digital currency has the potential to pose a huge threat to liberty and freedom. Now, for our viewers, generally speaking, a central bank digital currency is the digital form of a country's fiat currency. It's issued and regulated by a nation's monetary authority or central bank. It's programmable, so it can be modified to work or not work in certain transactions. And it allows authorities to monitor every single payment made and received, so obliterates financial privacy and anonymity. And I, for one, was quite encouraged that former President Trump has been taking the message on CBDCs on the campaign trail. Trump, who of course is also the current frontrunner in the Republican race, promised to ban the creation of a central bank digital currency when he was speaking at a campaign stop earlier this month. And he warned that CBDCs could pose an extremely dangerous threat to freedom and vowed to prevent them from being created should he become president again.
And tonight, I'm also making another promise to protect Americans from government tyranny. As your president, I will never allow the creation of a central bank digital currency. You know about that? I didn't know you know so much. I'm very, well, New Hampshire, very smart people. very current. You know what they're doing. Such a currency would give a federal government, our federal government, the absolute control over your money. They could take your money, you wouldn't even know it was gone. This would be a dangerous threat to freedom, and I will stop it from coming to America.
So what is your reaction, Nomi, to what we heard President Trump say there?
Well, there is certainly a real danger about central bank currencies being used to feed into people's privacies, to basically be programmable currencies that can use blockchain technology, or basically technology that allows for the accumulation of information over forever about individuals and about what they spend, where they spend it, and how they choose to conduct their lives relative to their financial lives. And I think that is a serious threat. I'm not comfortable with the Federal Reserve having full autonomy over what I do with my money, or control, or just even a peek. Now, the Federal Reserve is an institution that is generally not transparent about what they do. And they have not indicated in any of their studies about CBDCs, more than sort of lip service to, well, we understand their privacy concerns, how they would actually be transparent to us if a CBDC were issued and were something that we would all use with regard to our information. So all of that is very concerning. And it's one of the reasons why, even though there are a lot of countries that are in various stages, 194 countries are in various stages of looking at how they could bring a digital currency to market, including the Federal Reserve. We have Brazil that's announced that they're looking to launch theirs, major, the B and BRICS country at the end of this year. And the Fed's looking at those things as test cases. So I am very concerned about what that means to privacy. I'm concerned based on what happened with the SEC, and basically the SEC getting hacked before they announced the acceptance of Bitcoin ETFs when they're supposed to be protecting the public from anything that could happen nefariously in markets. I'm also concerned about CBDCs having the potential to really invite cyber attacks, and that also hurts people's information. So there's all sorts of levels where I am concerned. And that said, there's an act that's right now being floated around Congress that's being championed by Majority Whip Tom Emmer. It's got, I think, 75 to 80 co-sponsors on it, which is in tandem to what Trump just said. It is an anti-CBD surveillance law. So there is something that's working on a companion basis in Congress. This is not stopping the research that's going on at the Fed with respect to converting or to watching for an appropriate time or system to provide CBDCs, even though they're saying that they will wait for Congress's approval. So there's just a lot of pieces to this puzzle that have yet to unfold. We have to be careful about.
In terms, though, very quickly, of it becoming a reality, Fed Chair Powell testified before the House Financial Services Committee last year that it is something that would need congressional approval. What do you think the process would be? Is it something that a president could veto? Is it something that could sort of sneak in through some other kind of executive act? A lot of the guests that we've spoken to say they're not going to tell you, hey, welcome to FedCoin. It's just going to surreptitiously work its way into the system, and then they're tracking you, and then it's programmable, and then it's linked into a social credit system. It doesn't all sort of get advertised all in one go. What do you think the likelihood then of a central bank digital currency in the US becoming a reality?